Okay, let's explore the question first. As I told you, always just see the requirement first. So it is a section B type question worth 20 marks. And in requirement number 1, in respect of the gift of the office premises to F on 30th June 2021, we have to advise whether or not CGT will be available, and if so, to what extent. It's worth 3 marks and it's purely explanation. Second is that advise of the maximum inheritance tax liability and the circumstances in which this would arise. Okay, this is again majority explanation. And then part B is about some residence related issues. And in part C, we have business asset disposal relief, bit calculation as well. So this is about CGT and IHT, a mix of question. And it is a very likely, chance that in section B, you will get such kind of question in which there is CGT and IHT complete 20 mark question, right? Now, from this perspective, let's discuss the question. Max ceased trading 2 years ago. Now, this is an important thing. The business has been seized 2 years ago, and now he's now about to move overseas. He would like advice on the capital gain tax implication about the disposal of 2 assets previously used in his unincorporated business, and also asking about the IHT implication of gifting one of them. Max has always been UK resident and domiciled as well. Is widow and has 1 daughter, Farah, and is a higher rate taxpayer. Make disposal each year to use his annual exemption for capital gain tax purpose. Has made one previous lifetime gift to her daughter on 6th May 2018, which resulted in a gross chargeable transfer of 1,94,000. Now look, whenever we have to apply IHT, we have to use the concept of nil rate band. And in order to check that whether nil rate band is available or not, we have to use the concept that is called the look back 7 years rule. So you should be clear about look back 7 years rule. Okay. Max is an unincorporated business. Previously, he was operated as a sole trader for many years, and then he ceased business on trading business on, this is something important, date 31st May 2019. Why? Because in the last part, this is a case of a business asset disposal relief, BADR. Can anyone recall the condition that BADR is available in the case of disposal of the whole business, in case of disposal of shares, in case of cessation of business? So what is the condition? If you know that condition, you can easily target that part of the question. What is the condition for those businesses that have been seized and now selling their assets? Will they get 10% BADR on that asset? Any idea? Think about it. So business seized on 31st May 2019, and Max still owns office premises and a machine which had been used exclusively in his business until 31st May 2019. Yes, you are right. Perfect. The condition is that if the business is sold within 3 years of the date of cessation, then you will be eligible for BADR. So we have to check in that question whether 3 years condition has been satisfied or not. Max now wishes to dispose of these assets prior to moving overseas. Okay. Now, first one is proposed gift of the premises. Max is proposing to gift the office premises to Farah on 30th June 2021. Max acquired the premises on 1st April 2013. So this is basically a gift. And you know that a gift has IHT consequences as well as CGT consequences too. Since 1st June 2019, the premises have been let to an unconnected company. Previously, that particular premises was used for business purpose, and from 1st June 2019, that has been let to an unconnected company. The market value of the premises was 1,68,000 when it was gifted, which exceed the original cost. Right? So this is about the gift of office premises. Next thing is about his movement to overseas. So Max has decided to move overseas for a period of around 2.5 years, commencing from 1st November 2021. Max does not intend to return to UK at all during this period. So it's as a period of absence from UK, 2.5 years. Max will return to live permanently in UK on 30th June 2024. That is in the year 24-25. Look, residence issues, overseas, domicile issues, you must have a good grip on these topics. And moving from UK, coming to UK, these are very important areas. Max is not entitled to use the split year treatment for determining his residence status in any tax year. Now, the last thing is proposed sale of the machine. The machine was acquired on 1st August 2017 at a cost of 72,000. Max has received an offer to sell at 84,000 in June 2021. The business has been seized in 31st May 2019. Did we satisfy the 3 years condition? If you are selling this machine in June 2021, can you check please? If yes, then you will be eligible to get this BADR. Otherwise, BADR is not possible. If you write few lines about it, you will get the marks. So it's like 2 years have been passed, and the condition was 3 years after, within 3 years. So it means condition satisfied or not, we have to see. Okay. It might be possible that condition has been satisfied. It might be possible the condition has not satisfied. Let's see the example first, and then you will decide. So first offer is June 2021. An alternate offer is about 90,000, but will not be able to complete until June 2022. So it means in first case, the condition has been satisfied. And in the second case, the condition might not be satisfied. Okay. So it's easy to attempt this part of the question. I told you in the previous lectures that always try to find out easy marks. You have to identify easy marks first. If you think that A, first one is easy, go for it. If you think C part is easy, then you can start working on C part. Okay. So C part is comparatively easy in this question. So we'll start from C part, like explain whether or not, the words are very important, explain whether or not business asset disposal relief, that is BADR, will be available on the sale of the machine, and calculate the increase in after tax proceed if he sell the machine in June 2022 rather than in June 2021. Okay. So in both cases, we have to find out that what is the after tax sale proceed, right? But first of all, we have to discuss whether BADR is available or not. So let me use my working on word processing document. So what I'm solving here, I'm solving C part, and this is basically in order to satisfy conditions for obtaining BADR, the asset must be, one is the 2 years ownership condition that has been satisfied, right? That business had owned at least for 2 years prior to cessation. That condition has been satisfied. Similarly, it must be in business use, also satisfied. But the third thing is that the asset must be disposed of within 3 years of cessation. I'm writing the rule of tax. Okay, if you remember that, you can get the marks. So now connect this with the example. If she sell the asset in June 2021, the third condition will be satisfied. Am I right? But if she sell the asset in June 2022, means after June 2022, the condition will not be satisfied. This is the basic tax concept. Now, we have to calculate after tax sale proceed. So first one is June 2021. This is the heading. We have to find out after tax sale proceed. And for that, I have to calculate CGT. I have to calculate gain, and then I have to calculate CGT. Okay. So let's move to my question. Let's identify what is the cost. The cost is 72,000. If I sell this in June 2021, the price will be 84,000. Okay. So 72 and 84. So let me just calculate. The chargeable gain is, so you can show it here as selling price, which is 84,000, deduct the cost, which is 72,000. So it means we have a gain of how much? The gain is 12,000. Am I right? The gain is 12,000. So now, as we have noted that BADR is eligible, as BADR is available, so CGT is, how much is CGT? 10%, right? 12,000 at the rate of 10%, and that would be 1200, right? Wait 1 minute. Wait 1 minute. Let me give one student access of the class because I have changed the. Wait 1 minute. Okay. What is your question? Can we do it equally on Excel? Yes, you can do it on Excel, but as I told you that if you have to do some minor calculation, so it's better to use the same word processing document in order to save time. And if you have to do some major calculation, then you can use the Excel along with word processing document. It's up to you. If you are comfortable enough in using one, then it's better. The examination team, the examiner has no issue with what kind of processing, the word processor or spreadsheet you are using, but the presentation should be clear, the calculation should be clear, the explanation must be clear, the rule must be clearly written, then you will get the marks. Mind you, and believe me, the examiners or the marking is very lenient. Let me tell you one incident that why I'm saying that the marking is lenient. Let me give you just one incident. I was checking one of the paper that has been given to us for the purpose of learning of one student. So I marked that paper, and I'm a very strict marker. So I give the student like 36 to 37 marks. And then the examiner reply was that you have checked it on a very strict basis. And actually that student got 56 marks in real exam. Because examiner has given the student so many marks, which I think was not able to just for the sake of poor presentation or like that. So examiner is very lenient. If examiner wants something, and if there is anything that examiner can identify from your solution, believe me, you will get the marks. So you have to produce your text knowledge, and the better you produce, the more the chances that you will get the marks. So now the requirement was after tax proceed. So how we can calculate after tax proceed? What is the sale proceed? Sale proceed is 84,000, right? How much is the tax? Tax is 1,200. So it means we can get the proceed, and that is 82,800. Am I right? So it's 82,200. Right? So this is the first one. Now, if sale took place after June 2002, then as we have discussed, that will not get the BADR. Okay. So the same, the chargeable gain is now, the chargeable gain is how much? Why it has been written that he's a higher rate taxpayer. So in case of higher rate taxpayer, you will not able to apply the basic band rate. That is the second rate is 20%. Am I right? Second band rate of CGT is 20%. And so my gain is 2400, right? That is the double one. So after tax proceed is 84,000 and deduct 2,400, and as a result the answer I will get is wait 1 minute. Maybe selling price is different. Let me check the question. Yes, selling price is different. So the gain we have to calculate again. Chargeable gain is not this. Chargeable gain is selling price is 90,000 because the price is different. Cost is same. So cost is 72,000. And as a result, the gain is 18,000. Okay. And let me calculate CGT first. So CGT is, now the rate is 20%. So 18,000 into 0.2. Why I'm using 0.2? Because it has been written in the question. Okay. So 0.2 means it's 3,600, right? So now deduct from 90,000 3,600 and you will get the proceed, and that is 86,400. Okay. So 86,400 is the proceed, and as a result the increase in proceed is, again take the difference. Previously it was 82,200 and now it's 86,400. So it's 82,200. What is the difference? Difference is 3,600. Now you can see the presentation. First, I have explained in a bit in summary way. Then I have calculated in the same sheet. Okay. So this is the part C calculation. Check again that what was the requirement. Explain whether or not business asset disposal relief will be available on the sale of the machine and calculate the increase in after tax proceed if we sell the machine in June 2020 rather than in June 2021. Is there any question on this? If not, then you will move on. A part 1 and part B. That is basically an advice needed against CGT and IST. Now let's see. They are talking about the CGT advice against gift relief. Okay. So the second thing is about gift relief. And this is basically you can check from 31st May 2019. Business has been seized on 31st May 2019. And first one is within 3 years and second one is after 3 years. That's why BADR is not available. Okay. So proposed gift of the office premises. She is giving a gift of office premises to her daughter on 30th June 2021. Now, as she's gifting, so let's recall what kind of relief is available on gift. So it's very easy. You can easily identify the gift relief or holdover relief is available. And you know that it is available when the asset has been used for trading purpose, right? So is this asset has been used throughout for trading purpose? Both rollover relief and gift relief, the condition is same because both reliefs are available for business assets. Even BADR is also for business asset. So we have to check whether this premises has been used for business purpose or not. What do you think about that? Is there any availability? So let's count the date. The gift was on 30th June 2021. It was acquired on, what is the date? When she acquired that premises. From 1st June 2019 till the disposal date, that is June 2021, that is 2 years, that has been given to for letting purpose. And from 1st April 2013, so let me just write the date here. First of all, the date is, acquisition date is 1st April 13 and disposal date is, or gift date is 30th June 2021. Can you count how many months the ownership has been? From April 13 to June 2021. First count till 2021, like 31st March. Okay, so it's 14, 15, 16, 17, 18, 19, 20, 21. So 8 complete years. Am I right? 8 complete years, right? 8 plus April, May, June, 3 months. Yes, you are right. So how many months? It's 99 months of ownership, correct? And then what is the letting period? The letting period starts from 1st June 2019. So it's 24 months, right? So out of 99 months, 24 months is for letting period. 24 or maybe 25. Let's check again. From 1st June 2019, so to 30th June 2021. So 7 months, 19 and 6, 19, 6. How much? 25. It's 25, not 24. So 24 months is for letting. It means business use is 77 months. Okay. So we have to explain whether CGT will be available or not. If so, to what extent? Very simple. CGT is available, sorry, gift relief is available, and to how much is available? Let me write. Let me use the it again. So this is my A1, that is gift relief discussion. And you can say here the gift relief is available, and you have to write the reason why. As it has been used for trading purpose, but gift relief is restricted due to non-business use. The total period of ownership is 99 months. You can show the date here, that how you have calculated 99 months. So then and trading period is 77 months. So GR is restricted to gain into period of trading over total period of ownership. Is that correct? This particular explanation is fine for 3 marks. Not much needed. Just show the dates of 99 months and also to show the dates of how you have calculated 77 months. So that is enough in order to get the required 3 marks. Now let's move to other part, that is part 2. Advise the maximum potential IHT liability and the circumstances in which this would arise. So now we have to think about that whether this particular gift is eligible for IHT or not. So can you recall whether this gift is a potentially exempt transfer or a chargeable lifetime transfer? And the maximum liability, so you have to identify hypothetically, you have to do some calculation as well, because there are 6 marks. Now see, the gift has been given to her daughter. So first of all, it is a potentially exempt transfer. So my first point that I have to write, it's a potentially exempt transfer. So what? So during lifetime, a potentially exempt transfer, it's not taxed, it is exempt. But then you have to write that if donor die within 7 years. So let me just write in short the answer. So it's A point 2, and that is IHT implications. Okay, that is IHT implication. So what is IHT implication? As it's a pet, so no lifetime IHT. But if donor die within 7 years of making gift, then it will be taxable. Taper relief will be available if donor die after 3 years. How much taper relief is available? In between 3 to 4 years, you can check your text sheet for that how much taper relief is available. Yes, it's 20%. So one thing important as well. If you can see in the question, there was a previous gift to Farah as well on May 2018. So it means that we have already 1,94,000 that can be used. NRB is available, that is 3,25,000. You can use look back 7 years rule, and then there is a potentially exempt transfer, and that is chargeable. So NRB is available. What is the value? Can you find out the NRB value? Also, you can write a point here. Annual exemption will be available to, and that is 3,000 for current year and 3,000 for previous year, that is 6,000. So keeping in mind the annual exemption, keeping in mind the NRB, keeping in mind assuming a taper relief will be available, so we have to find out the liability. So what is the value of the gift? The value of the gift is 1,68,000. It means the value available for this one. What is the answer of this 3,25,000 minus 1,94,000? How much NRB is available? Is that 1,31,000? Can you check, please? So accordingly, the IST liability will be gross amount. You can write 1,68,000 annual exemption. You can deduct, you can use Excel for that if you want to. Okay. So yes, it is 1,38,000. And the value that is available is after this is we have 1,62,000. And from this 1,62,000, you can write, you can also show it here as like this, that we have 1,62,000 after this, and we have NRB available, this one, and the leftover amount is subject to what is the rate of IST? It's 40%. This is basically a hypothetical assumption that the donor will die within 7 years, and if he will die after 3 years, then taper relief will be available. Okay. So maximum liability has been asked. So what would be maximum liability? You can calculate from this figure. And that is, I guess, 12,400. Am I right? 12,400 maximum. And if taper relief is available, it depends on the timing of the death, then this might be changed. But the requirement was identify that how much is the liability available. You have to explain each point, not just write explain each point in 1 or 2 lines, that why taper relief is available, why annual exemption is 3,000 plus 3,000. Okay. So in this way, that would be a reasonable answer. So let's move to the remaining part of the question. And that is related to overseas issue. This is a very tough one. That was easy. That was easy. This is a tough one. So I told you in exam that if you know that a part is difficult and not able to do well on it, just skip for the time being and move on to next question and try to find out some easy marks from another question. And then if you have some time left, then you can come again and discuss this part as much as you can do. So explain the effect of Mac's period of living overseas on his UK residence status for all relevant tax years, and advise him of the CGT consequence of the sale of the machine in June 2021 or alternatively in June 2022. So basically, there are two issues. One is the residence status we have to check. And second is we have to see what would be the impact if we sail in June 2001 and if we sail in June 2022. Okay. Now, as you know that, first of all, that if you want to answer it well, then you should know that that what is the residence rule. Okay. What is the residence rule? So let me check again. What is his status? Max has decided to move overseas for a period of around 2.5 years, commencing from 1st November 2021. That means tax year 21-22. And he does not intend to return to UK at all during this period. He will return in June 2024. That is 24-25. So we left in 21-22 and will come again in 24-25. In between, there are 2 tax years. Okay. So if we come again in June 2024, the number of days he will spend in UK will be how much? From June 2024, that would be like 6 months, and the remaining 3 months, 9 months, and you can identify how many days in 9 months, right? Now the rule says that, let me write here. One is automatic non-resident. The second is automatic resident. We have to check this too. And third is number of days and what? Sufficient tie test. So first part of the question deals with this kind of thing. So he's leaving on 1st November 2021. And how many days he's in UK? So you can count from 6th April. So it's April, May, June, July, August, September, and it's October. It's 7 months almost. So it means the first test in 2021, the automatic non-resident test is not satisfied. Non-resident resident test is not satisfied. Why? Because he spent more than 91 days. This is the first condition. Now in 2021, he spent almost 7 months. 7 months means you can say that automatic resident test has been satisfied. And what is that? One of the condition is he spent more than or at least 183 days. So he's meeting that target in 2021. So he's a UK resident in 21-22. Okay. Now in 22-23, 23-24, okay, is not in UK. So for the next 2 years, that is 21-22 and 22-23, not in UK. So meeting first test, automatic non-resident. The minimum criteria is 16 days. Now is the status of 23 and 24. What is his status? He will come back in UK from June 2024. So that means he is also meeting automatic resident test. In 23-24. So it means 2 years he is not resident, and in the remaining afterwards he's a tax resident, and previously he's a tax resident. Like, now two things. If he sell in June 2021, then what would be the consequence? And if he sell in June 2022, where is a non-UK residents, so what would be the consequences? So for that purpose, you should know the overseas rule. That is how CGT is applicable on overseas person. So let me just give you some idea about the theoretical notes, and then we will connect this question. Can you see my PowerPoint slides? Can you see my notes? Can you see my notes? Okay, now see the rule. An individual who is UK resident and is domiciled or deemed domiciled in UK is taxed in UK on worldwide chargeable gain. But if someone is resident in UK, but it is non-UK domicile, taxed in UK on their overseas gain on either an arising basis, arising or remittance basis, right? This is the first rule. Now see this. He was not a UK resident in 2 tax years, but there is a rule called temporary absence abroad. When an individual returned to UK after a period of temporary non-UK residence, they will be charged to tax on gain arising in that period of temporary non-UK residence if conditions are satisfied. Okay. What is the definition of temporary non-UK resident? An individual will be regarded as temporarily non-UK resident if in 4 or more of the last 7 years, immediately preceding the tax year of departure, the individual was UK resident and the period of non-residence is 5 years or less. What is our condition in the question? He was always a previous UK resident. Similarly, his absence period is almost like 2.5 years. It means the condition has been satisfied. And although he's not UK resident, but is meeting the non-UK residency test, that is absence abroad. Okay. Now this is the rule. If he re-enter in UK, if he return within 5 years, there is a different rule. If he return after 5 years, this is a different rule. So in my condition, he is returning within 5 years. Okay. So liable on disposal of all assets whilst abroad if the asset was owned before leaving the UK, and disposal after the date of return. So this is enough in order to attempt our question. So let's see. The first date is 1st June 2021. So first date is, disposal date is 1st June 2021. If he sell the asset in 1st June 2021, so basically he's a resident in 2021. Okay. So as she or he, whatever, is resident in 2021, so liable for CGT. This is the consequence. And if he sell like in June 2022, which is a period of non-UK resident, but is a temporary UK resident. So in that case, first of all, the rule is that if a non-UK resident is selling something, is not liable for CGT, but for a temporary resident, temporary non-resident, the tax will be applicable when he will return. Okay. So you can, first of all, temporary non-UK residents. We will discuss that point. Why? The condition. And then he will return within 5 years. So CGT is applicable when he returns. When he or she return, that is in the tax year 24-25, tax is to be paid. So overseas is always a very tough one for the student because you have to remember lots of date. You have to identify the correct dates for these. First of all, these 3 tests must you know carefully. What is automatic non-resident condition? What is resident? What is number of days? Sufficient tie criteria. Then you should know the domicile status, what kind, and the deemed domicile status, and these separate issues. So this is basically the question. And in that question, there are CGT and IHT issues and some BADR issues. So I have covered all these in this question. Any question you want to ask? Any confusion? Then let me move to another question for today. I have shared one of my previous recorded exam drill session to you guys. The link has been there. What you have to do, you have to enroll on this link and then you will be able to access that course. It's a 5-day revision course. Try to watch, try to practice those questions that I have attempted in that previous revision session. And that will going to benefit you a lot if you work on those questions. Meantime, if you want to ask any question, just ask, and then I will move to another question related with CGT and IHT. Okay. Let's discuss another question. Now, give me one of your feedback that are you now able to use the platform? Is that enough? We have discussed in last 2 days and today that how to use Excel, how to use word processing document. Is that enough, or you want some more uh, on that? You want some clarity on anything? Then please feel free to ask, because you have to use this wisely, right? Because presentation is very important. Your answer should be legible, especially in question number 1. We know that there are 4 professional marks. So proper headings, proper sequence, proper calculation, proper theory explanation, you can get these 4 marks. Okay. If you have problem in determination of residence, then my advice is, first of all, work on these 3 tests. Test number 1, the non-resident; test number 2, resident; and test number 3, the day and tie. First of all, clarify this. Then clarify the domicile status, that what is the domicile of origin, right? Then work out the individual deemed domicile status in IHT specifically. And then you can just work on splitting here the arising basis and remittance basis. So if you work in sequence, that would be easy. And then try a few practice question from the past paper, just I did in this question. And then you will be confident if you work in this way. Always, a student always find it difficult, because someone is going, someone is coming. You have to identify days, you have to connect the other things like what is the family status, what is the house, what is the maximum number of hours available, each and everything. Okay, now let's discuss another question. At the end, you have to practice the time bounded mock exam, so that are you able to manage the time? On ACCA portal, there are 3 previous past papers mocks are available. You can check these and you can practice. The challenge is that the space to view the question while working on Word and Excel is not that too easy as time while giving answer. One need to make a reference, opening the answer now and then make. Yeah, that is a problem, because there are lots of stuff in one sheet. You have word processing document, then Excel, then question, then answer, whatever. So it's challenging. Obviously, it's challenging. But practice will make you perfect. Okay, let's discuss this question. First of all, the requirement says that in respect of the gift of the warehouse on 1st October, this is the date of gift. Explain why capital gain tax gift relief will be available. First of all is GR. Second is explain with supporting calculations the effect of making a gift relief claim on total liabilities of both A and D. And in the third, advise on the availability of business property relief on IHT if A die before 1st October 2028. So all 3 parts related to relief. And in the end, explain with supporting calculations the amount of after tax proceed which will be available from the sale of fixed equipment, and tax consequences of both S and B of the gift of motorcycle. This is worth 20 marks. Again, a section B type question, combination of IHT and CGT. A requires advice on the capital gain tax and IHT implication of what? Gifting a warehouse to his daughter. So from the IHT point of view, again, it's a potentially exempt transfer. And from the CGT point of view, they both claim the gift relief. He also required advice on the tax consequence for a company in which he is a director and shareholder of its disposal and acquisition of certain capital assets. A and D are both resident and domicile in UK, both higher rate taxpayers, both make disposal to fully utilize their annual exemptions. A is a director and 55% shareholder in S Limited, a UK resident trading company. Will give a warehouse building to his daughter on 1st October 2021. That is the date of gift. Now, as far as the warehouse is concerned, that warehouse was acquired on this date, that is the cost, always been wholly used, rent-free since that date. The current market value is 1,95,000. So whenever there is a gift, we will use the market proceed, market price and cost in order to identify the gain. And then we can use the gift relief against this. And we have to find out the base cost, right? She will use the warehouse solely in her sole trader business, intends to retain and use the warehouse until she sells his business in 5 years' time, when the warehouse is anticipated to have increased in value. In IHT, if there is an increase in value after gift, there is different story. And if there is a decrease in value, then in IHT, there is a concept called fall in value relief. Hope you remember that. The company prepare accounts to 30th June is owned by A and B. B is not connected to A and is neither a director nor an employee of Spider Limited. Now, Spider Limited has disposed of an item of fixed equipment for proceed of 20,000 that has been purchased few years back for 65,000. The tax written down value of main pool was nil. Rollover relief was claimed as well. Spider Limited will use the after tax proceed to purchase a motorcycle, which it will give to B. Okay, so this is the scenario, some gift, some further issues. Let's see the issue number 1. In respect of the gift of the warehouse, explain why capital gain tax relief will be available. Now, it's very, very simple that if you know the condition or GR, that why GR is available, so you have to just write that why GR is available in this situation. So for gift relief, the condition is that the asset has been used for business purpose, right? Am I right? And if it is 100% relief and 100% give, then whole of the gain will be used as a gift relief, and a joint election is to be needed, right? Joint election is needed. Anything else we can write on this? Just a 2-mark question. So just 2 or 3 lines, you have to write that why GR is available. So you can write that this is the condition of the GR and the condition has been satisfied. So GR is available. That is enough. No need to write lengthy paragraphs or like that. If marks is only 2, so just write that this particular warehouse is an asset which is used for business purpose, right? and the person who is receiving the gift is a UK resident, whatever condition you have learned, you have to just produce that. Now, what is the effect? In the second part that has been asked, that what is the effect? The effect is that the gain will be deferred. So first of all, we have to calculate how much gain will be deferred. And as a result, due to deferral, how much tax will be saved now? Because deferral means just you are taking time. Okay. And what is the benefit? So we have to identify how much relief is available. Part 2 says that explain with supporting calculations the effect of making a gift relief claim in against warehouse on the total liabilities of A, the donor, and B, the donee. So let me solve this part. That is part 2 of the gift relief. The first point is the as a result of claiming gift relief, the gain will be deferred. How much gain that will be deferred? We can find out the difference between market price and the original cost. So that is, cost is 62,000 and market value is 195,000. So it's 195,000 and 62,000. So this much of gain is deferred. Okay. The next thing you have to write is about that if there is any other kind of relief is available. PADR is not available on this disposal, not meeting the condition. Annual exemption is already used. So saving of 1,33,000 into 20%. How much is the saving by deferring this? There is 26,600. But this is just a time difference. It has been written in the question that they always use their annual exemption. It means they are in every year they are using. So that means not available for this particular gift. So if no information has been given on the question about annual exemption, so always assume that the annual exemption is available. So this is a basic CGT savings. Now, as far as the donee is concerned, so for her, this will be the base cost, right? And you know that the base cost, the cost will be reduced by the amount of the gain. And she might get the business asset disposal relief have to deduct it from market value in order to arrive at base cost. It means tax is to be paid on subsequent disposal. This is the first point. And in the question, let me check. This is a point written here, intends to retain and use the warehouse until she sell his business in 5 years time. This is an important point. She want to sell his business. So if she is selling his business, so it means BADR will be available if she sell it after what is the condition? That in order to claim BADR, the whole business as she intends to sell whole business, and qualifying period is also satisfied, that is 2 years. Condition is also satisfied. So as a result, now you can see here that the gain that has deferred is 1,33,000. So on that gain, the tax would be 10% only, right? That is 13300. This is the gain. So compared with that, a saving of previously the liability is 26600 and now the liability is 1330. So a saving of exactly 1330 is possible if she sell entire business and hold this asset till the disposal of business. So this is about gift relief as well. This is about BADR as well. The second point. The third point says that advise on the availability of BPR for IHT purpose if A die before 1st October 2028. So the gift has been made on, what is the date of the gift? The gift was given on 1st October 2021, right? And 1st October 2028, if we die before 1st October 2028, so we have to see the consequences for that. What is the condition of gift relief? This is the asset on which BPR is available at the rate of 50% if other condition has been satisfied. So we can write here that third one is BPR is available on this asset, but at the rate of 50%, not 100%, because this is basically warehouse. So this is a kind of exemption we can get on this. Because both before and after that asset has been used for business purpose. Similarly, you can write the other conditions about BADR. Check your notes for that. Let's move to the another part. Explain with supporting calculations the amount of after-tax proceed which is available after the sale of fixed equipment and consequences for both the company and B of the gift for motorcycles. This is the last part. So this is Spider Limited. The accounting date is 30th June. Ownership is 55% by A and 45% by B. Both are not connected. The sale proceed is 22,000. The equipment was purchased for 65,000. The pool balance is nil. We have already claimed rollover relief of 38,000 on that. So as a result, now this is the case of a company, right? The pool balance is 0. Okay. So if pool balance is 0, so we have to check it's a plant and machinery. Pool balance is 0. So it means that suppose pool balance is 0 and we have to show the sale proceed that is 20,000. So it means a negative value is there, and what it called? This is called balancing charge. And balancing charge is a negative capital allowance. So it's to be considered as trading income in tax adjusted trading profit. So like capital allowance we deduct, it's a trading income. So we'll increase the corporate tax liability. Okay. Now, as there is a loss as well. Okay. So are we able to get the loss? So another point is, as we are claiming capital allowance on this machinery, so no capital loss is available. Another point is that as rollover relief was claimed previously, and proceed is used to acquire depreciating asset. So what is the rule? If you acquire a depreciating asset, then the gain is subject to tax at the earliest of 10 years, disposal of the next asset, or cessation of the next asset. So it means that this particular rollover relief is now become chargeable, right? So the rollover gain is subject to CGT. And how much is the rollover gain? The question, it's 38,000. So total income is 20,000 and 38,000. So corporate tax will be 19%. Am I right? So it's 58,000 into 19% corporate tax, and there is an increase in corporate tax liability of 11,020. And they asked after sale proceed. So after sale proceed, while deduction of the value 20,000 is the sale proceed and tax is 11,020. So after tax proceed will be 8980, right? Another thing is that in the last part it was written that and tax consequences for both Spydra and Basir of the gift of the motorcycle. So Spydra Limited will use the after tax proceed, that is 20,000, to purchase a motorcycle which it will give to Basir. Now they both are shareholder, right? And this particular company is meeting the condition of a closed company, right? And in that case, we have to see that if a shareholder is receiving any kind of thing from the company, so what would be the consequence? So you can write it here about why it's a closed company, number one. Second thing is that Mr. the Basir Limited or whatever it is let me check, is not a director or employee, is not a director or employee. So as a result, is not getting a kind of salary. So this motorcycle is considered as dividend. So this is considered as dividend income, right? And as a result, the company is giving him dividend. So no capital allowances are available on acquisition of motorcycle. This is basically the closed company rule, that a closed company is giving a shareholder something which is not a director or employee. So should we treat that as a salary or a dividend? So in that case, if he's not a director or employee, then this proceed is to be treated as dividend. So this is the consequence of this gift. So let's check whether we have completed or not. The first part was about the gift relief condition. The second was about the impact on the liabilities. The third part was about BPR. Remember that BPR, there are lots of conditions. BPR is also available on lifetime gifts. BPR is also available on death estate. Similarly, on some item, 100% BPR is available. On some items, 50% BPR available. Sometime BPR is to be restricted as well. It's a complete topic, right? And then in the next part, we have disposed of an item of equipment, and rollover was previously obtained on that. That has become taxable as a result of the disposal, and we have calculated the after sale proceed. So any question on that? There is one very interesting question in the revision kit and also a past paper question. And why it's an important question? Because in a particular question, each and everything is related with both CGT and IST. So the question name is John Arc, question number 23. So let me discuss few points from this question as well about CGT. I have discussed in my live classes about IHT already on this. So I will discuss just CGT consequences of that question. Very technical question for IHT and CGT. A must try question. Now see, in the first part, that is worth 24 marks. And there are 1, 2, 3, 4, 5. A, B, C, D, E, 5 sections. What you have to do, you have to advise John of the IHT and CGT implication of gift made during the tax year 2021. Your answer should be supported by appropriate calculations, include any kind of relief available. You should ignore the installment options available, and see the effect of annual exemption we have to ignore for IHT purpose. Also, we have to ignore annual exemption for CGT purpose. Marks have been allocated, given. So from the CGT point of view, let me just connect this question. John Ark, having age of 76, has asked for your advice regarding the following gifts that she has made during the tax year 2021. On 13th of July, John made a gift of 250,000 ordinary shares in Orlean PLC, a quoted company, into a discretionary trust for the benefits of granddaughter. Okay. Now, in this particular question, we have to value the shares, and the valuation rule is different from IHT purpose and for CGT purpose. The shares are quoted at 146 to 150p with recorded bargain of 140 till 155p, right? John originally purchased these shares during 2005 at a cost of 149,000, also bought 75,000 shares and subsequently bought 10,000 shares. Okay. Orlean PLC is an issued share capital of 10 million, and John has never been a director or employee of the company. This is part 1. And now, as this is a gift, so what kind of CGT consequences are? Is there any CGT consequences? Because it is considered to be a potentially exempt transfer, right? Am I right? It has been given to her daughter, so it's a potentially exempt transfer. So it means there is no IHT at the time of transfer, but there might be CGT consequences. And if yes, there is a CGT consequences, then we have to calculate the value. So let's see. What is the market value criteria? So first of all, this is considered to be a deemed disposal, right? And for deemed disposal, any gift considered as deemed disposal, for CGT, we will take the mid price rule. Okay. 146p plus 150p divided by 2. And that is the mid price rule, and the price is 148p. Okay. So first issue is how to determine the value of per share. 250,000 shares have been gifted, and this is deemed disposal, right? Now, the shares have been purchased previously. Now you can see the date. Date is 30th July 2020. And the date of purchase. So you know that for CGT, the identification rule, we have to follow the identification rule. And as per the identification rule for individual, the identification rule says that, first of all, same day purchase. This is not the case in our example. Following 30 days. This is not possible as well. And then you have to use the share pool. So all these purchases, 200,000, then 75,000, and then 10,000 are part of the share pool. So we have to determine the cost from the share pool. So we have to construct a share pool, and then we will identify the value first. So a pool, how it's to be considered: number of shares and cost of shares. My first purchase is like 200,000 shares at the cost of 1,49,000. Subsequently, 75,000 shares at a cost of 69,375, and then 10,000 shares for 14800. Right? So before deciding, the number of shares are it's 2,85,000, and the value of shares are 233,175. Now we have to deduct the number of shares gifted, 2,50,000, and the value of shares. So the leftover amount is 35,000, and the cost that we have to identify is 204,539. This is the basic calculation, first of all, and this is 28636. Now we have to calculate chargeable gain. So the market value of 2,50,000 shares at the rate of 148. So 2,50,000 at the rate of 1.48 will give me a value of 3,70,000, and I will deduct the cost from the above pool, that is 204,539, and as a result the difference is gain, and that gain is taxable, 165,461. Okay, so it's 165,461. Now you can see here, this is a gift relief. So a deferral is possible. If both elect for deferral, that is the donor and the donee, then there will be no CGT consequences. So in this first part, there is no IHT consequences, and as a result of gift relief, there is no CGT consequences. Clear? As we have to show both IHT and CGT. The first, I have to tell about the IHT issue, and then I have to tell about the CGT issue. Now look for the second part. Now in the third part is quite easy, and let's see the second part first. Let's see what is in that second part. On 15th of July, John gave 20,000 of her 40,000 shares in R Limited, an unquoted company, to her son. Now this is potentially exempt transfer, and R has an issued share capital of 100,000 ordinary shares. And the husband also owned 40,000 ordinary shares in the company. So it is basically a tough one in the sense of IHT, because there are some connectivity of shares. So we have to find out the valuation issue here. But for CGT purpose, we have to see that how much we have the holding for CGT purpose. We have to see the holding, that how much is the holding. So we have 20,000 shares out of 100,000. So for CGT purpose, the holding is 20 out of 100,000. The holding is 20%. Okay. And the holding of 20% for CGT purpose is worth 7.90. So the market value of shares is worth 20,000 shares worth 7.9, and that becomes, for CGT purpose, it is 1,58,000. This is the market value. What was the cost? 40,000 shares were purchased at a cost of 96,400. So you have to allocate the cost, 94,600 into 20 out of 40. So that means half, and that is 48,200. So 48,200, and the related gain for CGT purpose, you can identify it's 109,800. It's 109,800. Now look, this is also a PET, and as well as it's a gift relief. So if I'll assume that it's a gift relief, so if I'll assume that I am opting for the gift relief, so it means no CGT consequences. So in both the part, there is no CGT consequences, right? Now see the C part, the third one. On 4th November, John gave her grandson an antique item worth 18,500 as a wedding present. So for IST purpose, there's a kind of exemption available, but for CGT purpose, this particular antique item is classified as a chattel, right? And an antique item is a kind of a vesting chattel. Okay. So how much is the tax charge? The selling proceed is 18,500, and the cost is 14,141,450. So X is a third one is the non-vesting chattel. It's not vesting chattel, it's non-vesting chattel. So selling price is given of non-vesting chattel 18,500, and related cost is 14,150. So for CGT purpose, the gain is 4,350. Gift relief is not available. Why? Because this is not considered as qualifying asset. The qualifying asset condition is not satisfied. So a CGT liability is 4,350, assuming annual exemption is not there, higher rate taxpayer. So the rate suitable is 4,350 into 20%, that is 870. This is CGT payable. Okay. From the IST point of view, this is a wedding gift. So although it's a pet, but wedding gift is there, so we have to deduct the wedding exemption along with other exemption if available. The question already said that no annual exemption is available. So a wedding exemption you can deduct, and the remaining is subject to the future IST if donor die within the 7 years. Now the next part, the fourth one. Fourth one is tough in terms of IST because it is an agricultural land, and for IST purpose, on agricultural land, an agricultural relief is available. But from CGT point of view, you can see here that John had purchased the land during 2009 for 92,000, and it is a gift, right? So as it is a gift for CGT purpose, a gift is subject to tax, but if gift relief is available, then there will be no CGT consequences. What is the open market value? The open market value of this particular land is, the value of the land is 300,000. So market value is 300,000 and cost for CGT is 92,000. So it means a gain is available. And as it is a gift, meeting the condition of gift relief. So a gift relief is possible. It means no CGT consequences. So there are IHT consequences, and you have to see whether agricultural relief is available or not. You have to see the condition. But for CGT point of view, there is no capital gain tax liability. Now the last part. On 31st March 2021, John made a gift of her main residence in Wells, valued at 2,65,000 to her daughter. Again, this is the potentially exempt transfer. However, as a condition of the gift, John has continued to live in the house rent-free. So in IHT terminology, this is called gift with reservation. I have already discussed this particular question with respect to IHT, so I will share the recording of that IHT part. That's why I'm just focusing on the CGT part in this particular question. Now here, this is the main residence. So for CGT purpose, what is the rule of main residence? On a main residence, in terms of CGT, we'll get the PRR, that is a kind of relief available if the condition has been satisfied. Okay. And what is that PRR? That we have to show the detailed working, that what is the honor occupation period, what is the period of absence, is there any rent period? So we have to calculate all together, and then we have to calculate how much PRR is available, how much letting relief is available. There might be some letting relief as well. So this is a relief question. Now we can see here, the house was purchased on 1st July 1999. Okay. And John occupied it as her main residence until 31st December 2003. Then it was unoccupied between 1st January 2004 to 2007. And in that period, it was rented out as a furnished accommodation from this period. And after 1st July, again occupied as her main residence. So we have to work out the period of occupation and period of ownership in this question. And for tax purpose, there are two kinds of occupation. One is the actual occupation, and another is the deemed occupation. And what is the definition of deemed occupation? The deemed occupation is, first one is like any period abroad for employment purpose, there is no restriction. It will be count as period of occupation. 3 years without any reason. 4 years within UK for job purpose, for employment reason. And what is the next one? Last 9 months, unconditional. In this particular criteria, this 3 years is subject to condition. Other than that, in 1, 3, and 4, there is no condition. Okay. So we have to prepare a table like total period of occupation and period of absence. That is also called the chargeable period. And let's identify the date. The house was purchased on 1st July 1999 until 31st December 2003. 31st December 2003. This is kind of actual occupation. So we have to find out how many months. So here, 6 months of 99, and it's 2001, 2, 3. So 4 and 6, 4 years and 6 months. So this total period is occupied. That is the actual occupation. So count as period of occupation. Now afterwards, from this period, 1st January 2004 to 31st December 2007. 31st December 2007. So if we count this period, so we have how many months in between? There is a rental period as well. Let me isolate that period. Rental period. How much is the rental period? 1st January 4 to 7. Rental period is 1st January 8 to June 20. So it's 1st January 8. Sorry. Let me check it again. Okay, afterward it has been given. Okay. So from 1st January 4 to December 07. So it's 4, 5, 6, 7. 48 months. And 48 months, the 36th month is exempt and 12 is chargeable. And after that, the rented period is started from 1st January 08 to 31st December 20. And this period becomes almost 12 years. Almost 12 years, right? No, 30th June. It's not December. It's 30th June. It's June. So it's like 11 years and 6 months. It's 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So not 11, it's 12 years and 6 months. So you can cross check. It's 150. And total 150 is counted as a period of absence. And afterward, the remaining is owner occupied from 1st July 2020 till 31st March. 1st July 20 till 31st March, the date of the gift 2021. That is approx 9 months. So this is my total period of ownership. This is my total period of occupation. This is total period of absence. So this is 109 and 162 and 109. It's 54. So the period of absence is 162 and it's 80, 90, it's 99. and 162 and 99 combined together, its total period of occupation ownership is 261, right? So how much is PRR? The formula for PRR is gain multiplied by period of occupation divided by period of ownership. So in this way, we can calculate that how much gain is eligible for PRR. Okay. So my deemed consideration value is cost is 67,000. Market value is 265,000. So market value is 265,000. Cost is 67,000. So gain before relief is 1,98,000. Now here we can calculate PRR, and the formula is 198,000 into 198,000 into period of occupation, which is 99 out of 261. Okay. So it's 75103. It's 75103. There is no letting relief available. The condition is not satisfied. So as a result, the chargeable gain is 122,897. This is chargeable gain, and this chargeable gain is subject to, because it is a residence, so it's subject to a tax rate of 28%, assuming it's a higher rate taxpayer. So my liability is 34412. This is the last part related with CGT. The question is very important. The question, each part says that identify in all 5 parts both IST and CGT implication. So I have calculated all 5 parts, but CGT implication, not IST implication. So very good question in terms of revising your concept of IST and CGT along. So this was the agenda of today's session. So this is the end of the